Welcome out to the Blue Sky Technical Analysis Trading Lab. This is Coach Matt. We're going to be talking about a few different topics today in the lab. And obviously, if you guys have anything you want me to take a look at, we will definitely do that as well. What is the goal for those veterans out there that have been attending this lab for a while? What's the number one goal here? What goal do I have every single week we do this lab? I only have one goal. What is that goal? It's to increase our financial IQ. That's it. That's it. And what I want to talk a little bit about today is I want to talk a little bit about front running, what it is, why we like it, how to properly do it. Now, how many of you do not know what I mean when I say front running? How many of you don't understand what that means? Picasso, Nacho. Okay, so basically, in a nutshell, front running is you have a trade idea, you have a level that you're comfortable with, and you're getting in front of the real move. Okay, so you have a breakout, for example, and you're saying, okay, I love this breakout level, it's clean, but you're not going to wait for it to actually break out. See, most traders would wait for it to actually break out before they take on any risk. Front running is you have a philosophy that you're willing to take on risk in infinity, kind of like what you're talking about, before you actually see that confirmation. And there's a lot of technical patterns out there in the market, but what we've discussed before is in a trending condition, you really only have three distinct patterns. Now, there's variations of those three distinct patterns, but you have one, the breakout, two, the overextension, and then three, the retracement. And anytime you're just trading those three patterns, breakout, extension, retracement, anytime you're trading those three patterns, whether it's on a day trade or whether it's a scalp or whether it's a swing trade or a position trade, really doesn't matter. The beautiful thing about technical analysis is the concepts that you learn intraday are very similar to the concepts you learn on a day chart, very similar to the concepts you learn on a weekly chart, which means the glue that ties everything together for most traders is the technical conversation because it's consistent regardless of the time frame. Price is price on a 5-minute chart versus that of a daily chart. And so when you're looking at trading just one of those patterns, you're just trading that pattern. That's not front running. You are trading a pattern in the marketplace. You're doing it with confirmation. You're doing it with an edge. You're processing your return to risk ratio. And so that's not front running. And so what I want to do first and foremost is I just want to take a look at a few companies out there that are in some degree of technical situation where we could discuss, is that front running or is that just a trade? And so I'm going to go down, I'm going to pull up a couple stocks here. Let's go to Broadcom here. Broadcom, if somebody is trading this pullback right here, are they front running or are they just trading a pattern within the trend? What do you guys think? Are they front running or are they just trading a pattern in the trend? Let's get a lot of answers. And guys, there's no wrong answer until there's a wrong answer. We're here to learn. Put it out there. You wouldn't short this setup here. You're just trading the pattern, guys. That's it. Remember, if all it is one breakout, two extension, three pullback, retracement, same conversation there. You're just trading the pattern. That's it. That's all you're doing. There's no front running here because this is the real pattern. When you look at, let's go to Eli Lilly. Eli Lilly is in a pullback situation. Okay. It is not ready for prime time in that pullback situation. So when you're looking, if you're looking at Eli Lilly here, and I'm tracking the bullish retracement situation, Am I front running or am I just patiently waiting on the pattern to come to a conclusion? Which one? I'm just patiently waiting. We have a trend, we have a pullback, we're waiting on a support to get built. You're just patiently waiting on the pattern to develop. You're in a trend. There's no front running. You already have a trend. Money's already being made. There's already trades happening there. Now we're just tracking that pullback. When we look at CCJ here, this was one that I absolutely loved yesterday. Absolutely loved yesterday. Look at that nice little high base, breaking out of that high base. Would this be a front run or would this be yet another example of just trading the pattern? One, two, three. What do you guys think? I'm still just trading the pattern, guys. Okay. I'm still just trading the pattern because I'm trading the breakout. I'm trading the pullback. I'm trading the extension. Whatever it is, you're just trading the trend. When you break out, you're trading the trend. And so regardless of what pattern you're tracking, whether it's the breakout like we have on CCJ or whether it's the pullback we have on, for example, Eli Lilly, those are just patterns that happen within trends. That's all they are. And we process those the same way we process any retracement, any pullback, any extension. Most patterns, most trades that happen in the market are not front running. In fact, I would say more than 90% of the patterns out there in the market have nothing to do with front running. Front running is a unique scenario that happens not within a trend. It happens within the construct of a continuation pattern versus a reversal pattern. For example, how many of you would suggest, let's go to a blackboard here. Give me one second. Let me get my blackboard up. Okay. So let's do some whiteboarding here. Now, market's in a bullish uptrend. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Is there any front running within a trend? Yes or no? Is there any front running within a trend? No, there is no front running in a trend. All you are doing is trading the patterns within the trend. That's it. There is no front running. You just trade the patterns. The front running conversation happens not in the construct in the trend. It happens in the development of the next trend. You're front running the next trend. You're front running the next pattern. And so it's actually a conversation that is pretty unique to continuation versus reversal patterns. And so once you double top, for example, and you start pulling back, you now get in a conversation of, is this a continuation pattern which continues the previous trend, or is this a reversal pattern that reverses the previous trend? And when you're in the early stages of the development of a reversal versus a continuation pattern, they're very, very similar. They're almost identical. In fact, the early stages to a continuation pattern are slowing momentum and a double top. The beginning of a reversal pattern, slowing momentum and a double top. They're absolutely 100% identical in the first couple stages of the ultimate pattern here. Now, what happens in a reversal situation, and it's very, very important because what happens at support is going to tell you specifically, is this a reversal or is this a continuation pattern? And if the market comes down and cannot elevate support, but comes down into the previous level of support, that is a reversal situation. And when that occurs, you can start thinking about either the breakdown, i.e., the real trade, or the second scenario that would happen is you hold support, you have a shallow retracement. And then once that first level of resistance establishes downwards here, that is a front running pattern going into the real trade, which would be ultimately the breakdown. And so when I'm looking at a continuation pattern or when I'm looking at an ultimate reversal pattern here, and I'm trying to determine ultimately where's the market's head at? Where does the market want to go in the next leg? Where's the overall analysis telling me the market wants to go? I'm really very interested in not if resistance holds, that's similar in continuation versus reversal, but do we increase support? Because if we increase support there, that is a cup and handle formation that could get front run into this ultimate 145 breakout channel. See, a front run is you're getting involved early in the real trade. I'm trying not just to capture a trade here, guys. I'm trying to capture a trend here. And does everybody understand the difference between trying to capture a trade and trying to capture a trend? Does everybody understand the difference in those two? Okay, Picasso. A trade is if I'm trying to just do one singular thing, meaning I try to catch the support bounce and I'm just going to drive it back up into resistance and I'm just going to swing trade that. A position trade is where you're trying to capture this entire next trend, where you're trying to get involved in front of the breakout. And that's what front running is. It's getting involved in front of the real move. And the reason that is popular in today's technical analysis and why people love front running today is because of how algorithms work. Algorithms are not going to wait on your beautiful pattern. It's not going to wait on your consolidation that you need. It's just going to move. And so you try to get in front of the algorithms that pump it up, 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 that you know are going to exist above the breakout channel. And so traders, when they see an increase in support against the backdrop of a double top, you're getting involved at the before the breakout, which is the real trade, because the trend is not established until it breaks resistance. And so what you're doing is you're looking to get involved down here so that when you start going into the breakout and those algos and those traders that love the breakout, they start piling in on top of that and it creates a momentum condition. Recently, just a few weeks ago, not even a few weeks ago, just a little bit ago, we were talking about silver. I think it was last week, we were talking about silver. And I was talking about this concept that I was doing on silver, and I was doing what's called front running. And I made the comment, this is a front running pattern. And then I asked the question, does everybody understand what a front run is? And that kind of led me to wanting to have this conversation here today. When you're looking at silver, let me kind of break it down the way I saw it. When you're looking at silver, silver's been a juggernaut here, guys, an absolute juggernaut. And the daily chart does not show how special silver has truly been. See, when you're looking at the weekly chart, this thing is a thing of beauty. Hugs that 9 EMA all the way up, hasn't broken that trend in any capacity, hasn't done a thing wrong literally since the breakout here. This has been a very consistent trend for a very long time on silver. However, recently we went through a double top. And so you had a pullback start here. You then came right back up into resistance. And you see how it kind of retraces a little bit deeper here, comes back up into resistance here, can't break that resistance, comes back down. It's when it comes back down that you start getting into that frame of mind about front running. It's because when you see it here, this was a beautiful break right here, an absolutely beautiful break right there. But if you didn't catch this break when it absolutely happened in the moment, you were already late in that move. You had to get this on the official break or you were late on that. And as you were coming into resistance, One thing that I just don't love is a slight extended price going into a very important breakout. You've already ran here one, two, three, four, five, six, seven candles. You've already ran seven candles, six candles. You got to ask yourself a question. How far is it going to run before it starts pulling back and you have that resistance level? And so when it comes back down, what happens, and this is very important because every asset class has a probability edge to it. Every asset class has a personality to it. And that personality that an asset class takes on the personality of the traders that don't come into this asset one time, but they're trading this asset over and over and over again. They understand that personality very, very well. And I'm telling you right now, you don't want to get involved in silver on the seventh day of a move. Can we all agree with that, by the way? That getting involved in an asset after 7 days of a move is probably an indication that you're late. And I say days just because I'm looking at a day chart here, but it could be candles. It's 7 candles into a move. You're a little bit elevated there going into that, and you have to ask yourself a question. How far is that going to run before it gets tired? How far is that going to run before buyers get exhausted? How far is that going to run before the buyers start locking in profit? And so you're slight extended going into the break, and you just don't have the buyers to support it. But what happens is you reset the distance in that pullback here. And that's why the front run looks really good is you have an edge going into the breakout. You were just exhausted going into the breakout. The buyers are still there. They're just exhausted because they've ran 7 days. And I'm going to ask you guys a question. Stocks have personalities. They take on the personalities of the people that trade it and invest in that asset class. You guys have personalities as well. In fact, how many of you like to run? You just like to run. It gives you peace of mind. It gives you joy. You feel good about yourself when you go out there and you run. Who here's a runner? Hiking, Nacho. Good. A little walk there, Jaja. Do I have any sprinters? Do I have any marathon runners here? Or is everybody like me and a little walk is better? Treadmill guy there, Picasso. Okay. Let's say, let's say, because we're all a bunch of walkers and hikers. By the way, a good hike is a very good thing. I love to swim, Ace. You and me, we're brothers from another mother. I love to swim. Swimming's fantastic. That's my peace of mind. Okay. So let's take Usain Bolt. Okay. Everybody understand who Usain Bolt is? The famous sprinter, Jamaican sprinter, world record holder, and all that. If he said, I'm going to go run a mile as fast as I can, I'm willing to bet he could run that pretty consistently through the entire time. And if the next day he came out and he said, you know what, I'm going to go run a mile as fast as I can, I would probably put a wager that Usain Bolt could run that mile as fast as he can because he's had a personality in doing it. Whereas if you said, yo, Matt, go out and run a mile as fast as you can, I'm not betting on me to go run a mile as fast as I can because you know what? The last time I ran a mile as fast as I can't remember. You shouldn't bet on me to go run a mile as fast as I can. Now, if you want to go on a hike, you want to go on a walk, yeah, that's my tone too. But I'm not going to go run that mile because that's not in me. I have a personality, I have a behavior. You have a personality, you have a behavior. So do stocks. Stocks can't run forever. Commodities can't run forever. Nothing can run forever without a secondary move. And when you are already involved 6, 7, 8 days in a move, you have to start questioning whether or not that has the viability of breaking and running on top of that. Because you're going to be asking the stock and the ETF or the commodity or the currency, whatever you're trading, you're going to be asking it to do things that it typically does not do. When was the last time we had a power move of 7 days without some degree of consolidation? Go look at the previous trend. One, 2, 3, 4, 5, 6, 7, 8, 9 days, consolidation. 1, 2, 3, 4, 5, 6, 7, 8, 9 days, consolidation. 1, 2, 3, 4, 5 days, pullback. You have a scenario where in the best trend of all time, silver's had, I shouldn't say all time. No, I am going to say all time. This one's better than what we dealt with in 2009 and 2010. In one of the best trends we've ever seen in silver, it still only ran 7 to 9 days before it needed to do something different because it gets exhausted. The same way we go out and run a marathon, we go run a mile, we get exhausted. We need to sit down. We need to put our hands on our legs. We need to take a break, relax a little bit. Same concept here. You go running into that resistance, you're a little bit extended. If you're going to be asking this stock to do something that it has not historically done, I don't like your probability of success. And that's why it's important to understand when this double tops, it's not the end here, it's the beginning. It's the end of the previous daily trend. It's the beginning point of the next trend. And so now that the resistance level has held, you know the previous trend is now over, and every aspect of the next pattern and the next trend is what we're trying to evaluate. And so when it was coming down, all of a sudden you're resetting the distance here, guys. Instead of running all the way from 47, you're now running from 50. You got $3 more to go up before you get extended running into that same type of pattern. And so when you see that reset into support and it increases support from this level right here to this level right here, all of a sudden that distance going into the breakout is shorter. And that distance going into the breakout, because it's shorter, it's going to take less. It's going to take less momentum, less buyers, less catalysts, less everything to propel that breakout. And remember, we have an edge here, 6, 7, 8, 9 days. That's how far silver's going to run until some degree of secondary pattern gets put in. We see it here. We see it here. We see it here. We see it here. 7, 8 days it runs before it gets tired. And then a secondary pattern forms. And what front running is, it's understanding what the development cycle of this pattern. Because the very second, let me get my trend drawing tool here. The very second resistance holds right here. Let's go back in time and just look at that. The very second resistance holds. Do I know at that point this is going to be a great front run or this is going to be a nasty reversal? Do I know at that point? Once resistance holds right here. I don't know. What do I know, Woji? What do I know? There's only one thing I know. I know the previous trend's over. I know that. That's what I know. That's the only thing I know. I know the previous trend is over. That's it. Okay. And we know the previous trend is over because to establish a trend, you have to have the constant breaking of resistance. Because of 100%. If resistance holds in an uptrend, whether it's a 5-minute chart, 10, 15 hour, doesn't matter to me. When resistance holds in an uptrend, that's the ending of the trend. That does not mean it's a reversal, though. And that's a mistake I want to say almost every young trader makes, truly. They will make the assumption that because resistance held, that it's now going to reverse. That's not the science. That's not the probability. That's not the analysis. That's not even in the cards yet. We don't know that yet. You can't prematurely say that simply because a resistance level holds in a daily uptrend, look at the consistency of the weekly uptrend. This is a consistent uptrend that is awesome. And so, no, resistance holding does not mean it's going to reverse. Resistance holding only means the end of the trend, that you have the end of the previous trend. Now you have to get into the frame of mind. Is this going to develop into a continuation pattern, or is this going to develop into a reversal pattern? And the commonality, remember what I said early on, the commonality between a reversal and a continuation pattern, which one continues the previous trend. That's why we see the weekly chart being so good here, or ends the previous trend. That's going to be a support conversation, not a resistance. Remember, there's always two sides of that coin. You have resistance and you have support. Because in an uptrend, what does support constantly do? It constantly increases. In an uptrend, what does resistance do? It constantly increases. In a downtrend, same concept. Resistance lowers, support gets lower. And so it's a dual pronged mandate here, kind of like the Fed guys. You don't just look at the resistance level and say, oh, resistance held, this is the end of the trend. If that would have been the case, I would have gotten out of my position trade, which I'm very happy I didn't get out of my position trade, because you see the end result of that. And so when resistance holds, what does that tell us? Everybody write this down. It tells us we are now seeing the end of the trend. The end of the trend. That's what we've seen. Everybody write that down. The trend is over. We've seen the end of the trend. Okay. And at this point in the saga, because technical analysis is just the story of the buyers and sellers over time. The novel's War and Peace. It's not the Cliff Note version. Technical analysis tells the long-term story of the market. And so when resistance holds, I now get into the frame of mind. What does support do? Because support's going to be extremely telling here. The reason I loved the front run last week is because support increased. And when support increases against the backdrop of neutrality, once that support level increases, and it increased by about $3 here, all of a sudden that tells me something. That tells me, one, yes, the trend is over, but it also tells me we have a continuation pattern, because a continuation pattern shows an increase in support. Think about this from from a bearish perspective. If the bears can't even push it down to support, do they really have an edge? Like if the bears can't even push once resistance holds, if the bears can't even push it down into support, where is the bearish edge there? Truly, because I don't see one. Does anybody else see a bear edge just simply because resistance holds? I never do. It's going to be what happens at support. The support increasing shows you that the buyers still control the trend. Does that make sense, guys? There's always that dual mandate. What is resistance doing? What is support doing? It's both sides of the equation. And if the support increases against the backdrop of that resistance holding, buyers still control the trend. Buyers control everything. And so two things happen right here when the support level holds. At that point, I'm hunting. At that point, I am actively looking to get involved here. And the reason I am is because, especially on some of these sensitive assets like silver, they're not going to be slow. And what I'm trying to do is get in front, i.e., front running. I'm trying to get in front of the larger move, is what I'm trying to do. Does that make sense, guys? When I'm looking at this increase in support, I know the real trade is the break of 54. I know that's the real trigger. And what I mean real trade, that's where everybody sees it. That's where every trader sees it. That's where the investors see it. That's where the hedge funds see it. Everybody sees it at that 54. Everybody sees the double top at 54. Everybody wants to get involved above 54. And I'm saying before those algorithms take hold and get the momentum, I want to get involved at 52. I want to get involved before the move. That's front running. Now, that's the first thing that steps. Now, if somebody says to me, Matt, I see the continuation pattern. I'm still going to wait for the breakout of the continuation pattern. I'm not gonna say that's wrong. That's the real trade. I have no problem with it. I just love getting that early edge more than anything. Just love getting that early edge. And so once that support level increases here, I get excitable because I know the buyers still have the control and I know well, I shouldn't say I know. I just believe we're going to see that move, and I want to get in front of that move. Okay. That's the first thing. The second thing here, remember how many days. I want you guys to start thinking about this. And don't think days. I'm just looking at a daily chart here, but think candles. How many candles on average did silver have a tendency to move before a secondary pattern developed? Before we started seeing profit taking, before we started seeing momentum shifts, 7 to 9, right? That's what the trend told us, 7 to 9. Well, guys, guess what? From that hammer to the confirmation here, that's kind of the low point here. 1, 2, 3, 4, 5, 6, 7, and we start to see a pullback. And so, if you're going to wait for the breakout in a front run situation, oftentimes you got to get involved very, very early on that breakout, or it's going to get exhausted fairly quickly. And so, remember, when you're studying the personality of a chart, any chart out there, every chart has a personality to it. I always like to think about how far something can run before it gets tired. And I'm thinking that in two ways. One, price, two, time. How much time duration does it take between two moves? How much price does it move? That is what I call potential average yield. So it's called potential, if I could learn how to spell, average yield, otherwise known as pay ranges. Pay ranges are a behavioral analysis tool designed to help traders understand average time and price between two patterns. That goes off Wyckoff theory. And so potential average yield is a combination of analysis that I use that is a combination of Wyckoff and Elliott wave theory is basically what potential average yield is. It is a technique that basically my mentor created, quite frankly, and taught me it. And I love it. I use it all the time. It's one of my number one go to understand targeting techniques, timing techniques, is to really just take a look at the behavioral analysis of time and price between two moves, and you can start to understand that personality of the stock. So, do you guys think that I'm a little bit surprised that we're seeing some slowing momentum in the silver chart right now? Like, do you think I'm personally surprised? Am I surprised that we're seeing a little bit of turnover here? I'm not. I'm not. And if I was just swing trading, I would have adjusted the stop loss pretty tight here. I am not just swing trading silver. I have a longer term view here, in and out, adding swing trades to it, but this is more of a position trade for me. Um, they don't they didn't run a marathon or a walk. They did the Usain Bolt mile here, Nacho. They silver doesn't like to do those marathons. It's not that asset class. Silver it can be very consistent in trends, but it does really give you 7 to 8, 9 days before it gets a little bit tiring. And I would say that's pretty much similar on a lot of the commodity asset classes. They don't have a tendency to run that far before you start to see a little bit of a different pricing power. Stocks can run a little bit further, in my opinion, on average, but it's pretty consistent, 7 to 9 days here on the silver trade right now. And so just kind of, again, does that kind of help you understand the front running concept a little bit better, guys? Yeah. Does this same technique work in futures? Yes, of course it does. It works on every time frame. For example, I haven't seen a lot of because of what's been going on in the ES this week, just a lot of like consolidation here. When you're in consolidation, there's no real like I don't want to say there's not front running that happens. There does front run happen in consolidation, but there's not a lot of reversal versus continuations here right now. There's more consolidation. But if you go back, like say on crude oil, I felt there was a pretty good front run situation a few days ago. Let me see if I can find it there on the hourly chart. Yeah, right here. So you see how crude right here is kind of slight bear downtrend here, and you kind of see the fake out right there, but really kind of support holding right here around the 57.40 level. And then it works right back up into the resistance level right here. So you see how it kind of works right here into the resistance. Do you see how it then comes down and establishes a higher level of support right there against the backdrop of that support? That would be a front run here going into the breakout. And so front running can happen on in any capacity when you're dealing with trending analysis. You come up to resistance, you see it through the continuation lens. That's a front run to the top side. If it forms that M formation, short porch, that's a front run to the downside. If you're looking at a bearish downtrend and you're coming into, say, a W formation down here, an increase in support against the backdrop of a W formation would be very, very, very powerful. The front run concept is always about what happens with support or resistance against the backdrop of a continuation versus a reversal conversation. And once you get that edge, and you can kind of we'll just kind of go back here. See the kind of the base neutrality here, just up to resistance, down to support, up to resistance, down. Well, if support increases, that's what I'm looking for. If support increases against the backdrop of some degree of neutrality, that tells me something. It tells me the buyers are there. It tells me the buyers control here. And this can be front run going into that breakout. Now, let's talk a little bit about reward to risk ratio here because to make a proper front run, we can't just talk about probable edges. We also have to talk about reward to risk ratio. For a standard trade to be a decent trade for you, what is your standard reward to risk ratio? Everybody tell me what your standard reward to risk ratio is. What do you have to have before you hit that button to enter into the trade? 2 to 1. That's the universal number there, Nacho, right? 2 to 1. Now, as a trader, I have two targets in mind. Always. Whether it's a day trade, whether it's a swing trade, whether it's a position trade. I don't target investments, but on all tradable situations, the minimum standard is 2 to 1. Okay. Yes, yes, Picasso. Now, in a front run situation, you're never going to get 2 to 1 at your first target. And also, you don't need 2 to 1 at your first target. What you need if you're going to front run is you need to be able to space out and identify a 1 to 1 reward to risk ratio. You have to have a 1 to 1 reward to risk ratio because you have to target 54 on the first hit. The reason 54 is a double top of resistance, even though I felt we were going to break out, you still have to ensure you have a minimum of a 2-to-1 reward to risk ratio. So if you're entering above 52 and you got a stop loss right underneath 50, you got a 1-to-1 reward to risk ratio. You have $2 of risk, $2 of return. That is 1-to-1. And so, in front running, if you're going to get involved before the break, before that real trade, you have to have a 1-to-1 reward to risk ratio. Now, let's take a look at a couple other stocks out there. Just to show you some examples here, more than anything here, guys. Let's take Bristol Myers here. Now, Bristol Myers was in some degree of neutrality. Okay. Can we all agree with that? In the trend here, Bristol Myers was in some degree of neutrality. A little bit up, a little bit down. Now, what is the telltale sign going to be to tell me who really has control of price? What's that telltale sign? Because in neutrality, nobody really has control of price. It's just up to resistance, down to support. Okay. It's if support increases, right? If support increases. Now, if support increases against the backdrop of neutrality, does that mean we have a trend yet? Not yet. But it means we have the first data point that would establish that trend, which means once support increases, could you be looking to front run that ultimate breakout? The answer is yes. Once support increases, that's your that is your sign that the buyers stepped in, that the buyers kind of worked out those sellers. Sellers can't drive it all the way down to 43. It's worked down to 43 multiple different times. Couldn't do that again. Support increases, puts it on the radar for the ultimate reversal and the ultimate move back up to the top side. Let's take a look at another one. Let's look at GDX. This is more of a top level. Now, in Power Hour today, me and RQ were talking a little bit, and I said I had some interest on GDX right now. Now, would GDX technically be considered some degree of neutrality? What do you guys think? Yeah, this level of resistance is not higher than that level of resistance. Now it is higher than this one. So we have a short-term uptrend against the backdrop of a double top here. Now, do you see how it's kind of getting close to that resistance zone, but it starts coming back down? Now, I love this, guys. I love this. Now, it may or may not work out on GDX. If it doesn't, I'll do it next time too. And I'll do it the next time after that. And I'll do it the next time after that because I've been doing it for a very long time, baby. And I love this situation. When you have a backdrop of neutrality with an increase in support and it shortens the distance going into that breakout, all of a sudden, I know a little move goes a long way here. And so the question is, I know I have a front run situation that is available to me, but I also have to have what? I have to be able to structure the trade 1-to-1 at resistance, or I can't make the trade. So if I enter above the high, 81.49, let's just say 81.50, and I put a stop loss underneath the 9 EMA, just kind of play the bar here, 80.03. I'm going to take right around $1.70 risk for a potential $3 return. Do I have a 1-to-1 reward to risk ratio? So I have a probable edge, and that's all I need. I have a probable edge. I have a 1-to-1 at T1, and so I love the front run ability. Now, since it's GDX, there's a couple stocks I'm looking at too, but you kind of get that point. Question, Gabber. What if the higher low base isn't a 1-to-1 distance from the previous support versus resistance target? Um, I'd have to look at a specific example on that, but if I can't It's really about what happens at support. I don't love high bases to run. It's really about that support level. If that support level increases and I can structure that trade at that 85, because if this was going to high base and not flag, a high base would have just been consolidation here. And honestly, I would have just said, wait for it to break out. You can't get a 1-to-1 on the high base. And so the high base isn't going to get you to what you need. You really want to see that flag, that pullback, that increase in support, because a high base doesn't increase support. A flag does increase support. A high base is simple consolidation. And so that flag is a technical increase in support. It's not yet. It's got to confirm it, but you do get the point there, Gabber. Let's take a. You guys enjoying this so far, by the way? Give me a hell yeah. I like that. Love that. Oh, I don't want you to miss too much of that stupid work there, Gabber. Okay, I won't stop talking then. Let's look at another case study. Okay, here's one I found earlier today. Now, do we officially have the double top on? I don't even know the company. I just found it on a scan today. Yeah, we have official double top, which means there isn't a real trade until what happens. Like there's not a real trade, like a probable edge trade until what happens? Until it increases support. And if it doesn't do that at any point, but comes all the way back down to the same support level down here around the 84 level, what is that? If support does not increase here, what would that therefore become? That's a reversal. That's a reversal, and you would be looking at doing the exact same shallow retracement and then blast that to the downside. And so the increase in support is going to be very telling here. And yeah, I wouldn't, okay, it's the same concept here, RQ. If it does develop into a reversal and there is no increase in support, but it comes all the way down to the previous level, and we get that M formation because that would be an M. You can see it there. Nice little M stands for murder. That M formation, but the same concept applies here, right? If you're extended to the downside, are we really going to ask this stock to go 9 days down and then another 5 days down? It doesn't mean it won't happen. It just means it's a tall ask. That's a big ask. And it probably doesn't move like that. And so what you would want to see here if you were going to short it is you would want to see that pop back up into resistance so that you could front run that, or you would want to see the low base that dials in that breakout channel and just trade the breakdown there. Listen, you're RQ the shorter. You love a good short. There's nothing wrong with a good short. Not at all. Not at all. But as of right now, is that what SGI is suggesting here? Like as of right now. As of right now, I would not, and I don't trade SGI, I just found it as an example, but I wouldn't touch it yet. I wouldn't touch it until support increases. And if support increases here at 90 and we get that confirmation at 92, like that's going to be a tough front run. If support increases here at 88, that's going to be a little bit of an easier front run because of the 1-to-1 reward to risk ratio. If support increases here at 90, you'd probably just rather, break out at 94 and get above 94 there. Remember, it's the increase in support, but if you're going to front run that, you got to have that 1-to-1 reward to risk ratio back up. And so a shallow pullback here might not do the trick. A little bit of a deeper pullback, increase in support certainly would. Let's take a look at wheat and precious metals. A little bit choppy price action here. Don't love the front run there, which means I am going to move on. Look at First Solar. Officially double top, a little bit of lowering of resistance there, increase in support. That kind of looks more symmetrical triangle-ish. And I don't front run symmetrical triangles ever, guys. Like if it's a triangle, if you got it in a triangle, I wouldn't front run any triangles unless you're doing it through the options market. And that way you can do straddles and strangles and so on and so forth. By the way, love me a good straddle and strangle. These are good times to put on straddles and strangles, but that's not what we're here for. All right, let's take a look at some that aren't ready yet. Let's look at CRH. Okay. As of right this very second, is CRH in a front run situation right this very second? Yes or no? The answer is not yet. Remember, if it's going to high base here, okay, if it's going to high base here, can you front run a high base if you don't have a one-to-one reward to risk level? Now, Ace, you might get in front of the breakout, but we are talking about the breakout, correct? But can you structure a one-to-one reward to risk ratio here? Not underneath the breakout channel. And because you can't do that one to one under the breakout channel, I'm not saying like there ain't other front running abilities here in a high base. I'm just saying it wouldn't be a standard continuation pattern type situation. Now, if the high base does not break out, but comes right back down to say, 114, pivots at 114, and all of a sudden we go from this support level at 107 to the 114 support level against that backdrop. Oh yeah, that would be a good front run here because again, you're looking at the increase in support. We haven't really had an increase in support yet, and so it's really just about the momentum of the high base and the breakout of the high base. And that would mirror a cup and handle 100%. And cup and handles, ascending triangles are very similar there as well. The number one thing I wanted to do is really just have a cool conversation on front running, continuation versus reversals. And again, whenever we do this lab, I really only have two things, guys. Number one, did you have some fun? And number two, did you learn something? And I feel if we had some fun, enjoyed our time together, we learned things, I feel like this is good time spent. And so I appreciate everybody for coming out here today. I appreciate everybody being the best part of BluSky as well. The last thing I want to do here today is I want to talk. I put together my latest AI Gold Rush watch list scan. Not scan, it's a watch list that I work off of. I've been managing this watch list for about 2.5 years now. I update it about every 6 months or so. And so I'm just going to kind of spot check some of these stocks on the what I generally consider called the AI Gold Rush watch list. Give me 1 second here, guys. Now, on my watch list, and I'll share my watch list with you guys if you want. But on my AI Gold Rush watch list, there are two scoring systems that I put every stock through. One is a fundamental scoring system that I created, and the other one is a moat. I call it a moat scoring system. The moat scoring system is how important is this company to the AI space? How easy is this company replaceable in the AI space? The fundamental scoring system is really about valuation, PEG ratios, PE ratios, forward PE ratios, debt to equity, free cash flow in comparison to growth aspects such as EPS growth this year, last year, EPS growth the last 5 years, EPS growth the next 5 years, profit margin expansion, return on equity. That's kind of the scoring systems in general. But I'm not going to go through that today. Just want to kind of highlight some of these names. NVIDIA, Google, Microsoft, Meta, Taiwan Semiconductor. These are the tier one AI names. These are the companies that you can't do, you don't do AI without these companies. They're all tier one. They're all fantastic. Tier two companies are, Amazon, Broadcom, Oracle. ASML is lithology and like they're 90, they score a 98% on the moat when it comes to the AI space. AMD, Micron, Lam Research, one of my favorite companies in the market is Lam Research, Arista Networks, Synopsys, and Veritiv Holdings. Those are all tier two companies. Tier three companies, these are where you start getting into robotics, automation, vertical specialty companies, companies that really kind of dominate a specific area of the AI space. Tesla and robotics is going to change the world. Palantir and government, military, obviously very important. SoundHound, one of my favorite cash flow stocks in the market, also has really, really good IP on and really kind of control that vertical too. Tesla, Palantir, Sound, pretty big fan of Datadog as well. Those are kind of my favorite ones on the tier three. And then tier four are specific companies that are more vertical based. A lot of the companies on tier one and tier two are what's called horizontal based, which means they have their greedy little fingers in many aspects of the AI trade. Vertical companies are people that, or companies that specialize in one aspect of the AI trade. For example, Adobe specializes on, creative design elements. ISRG on robotics, Rocket Lab sending things into outer space. Very big fan of Rocket Lab, by the way. Pretty big fan of that company. AVAV, very similar to Rocket Lab, really kind of a little bit of a space conversation there. But just wanted to talk about the AI gold rush. If you guys want access to the list, let me know, and I can certainly get that over to you guys as well. Um, I've looked at almost every company. I analyzed about 426 companies for my watch list there, Aaron. And because you have to pass the test, the two scoring systems. Most AI stocks don't sniff my scoring systems because they're speculative plays with not a lot of revenue, somewhat of a bubble mentality a little bit. And so I put great value on the fundamental condition when it comes to these longer term watch lists that I manage. So you're not going to catch a lot of the micro stocks there. Doesn't mean there's not good companies. Doesn't mean there's not good opportunities, good trades out there. There's companies I like trading, like Big Bear and C3.ai. Those companies will never, in my estimation, be a long-term play in the AI space. But the companies that I built the watch list on, those are the companies that are really, truly the longer term, building out the longer term ecosystem of the AI trade. Because the AI trade is not just the semiconductors and the software components, guys. The AI trade is the infrastructure build out. That's what the AI trade is. It's not just NVIDIA, it's the sovereign government expansion of the entire energy grid. It's where it goes to, Aaron. Yeah. All right, Tim. Thank you so much for hanging out with me today. If you have any questions on anything we covered here in the lab, obviously hit me up in Discord. Um, Outside of that, and if you are looking for anything, I'm looking for some topics. If you have a topic you want me to prepare a lesson on that you want some assistance, hit me up in Discord as well. Outside of that, everybody have a wonderful, wonderful rest of your day and enjoy the night. And thanks for coming out here today, guys. Later, team.